Welcome back to Yahoo Finance. This is the final round and stocks higher on the day. We've been talking about many of those big cap tech names hitting all-time highs. The NASDAQ composite, the NASDAQ 100 hitting all-time highs. Right now, though, we're going to talk about some under the radar tech picks. I want to bring in our next guest. Her name's JoAnne Feeney. She's a partner and PM at Advisors Capital Management. And we're going to talk about 3 stocks that she likes and she owns. Before we do that, though, I just have to get your take on the rally that we are seeing in big cap tech names. Do you think that, I mean, there's some skepticism out here just among ourselves. Where do you fall on it?
Yeah, you know, the rally has been impressive. And a lot of it is warranted given how quickly the world has changed to working from home, to much more entertainment streaming from home. A lot of the names we've seen rally are reflecting those fundamental changes in how and the opportunities for those companies, but it is making clients nervous. You know, I was talking to a family office last week of advisors, and they have clients coming to them, asking them the question you asked me: how long can this continue? Is this rally justified?
So as you're trying to answer that question for people and find maybe under the radar areas to look at, let's bring in a couple of these names. And first of all, I want to talk about Zebra Technologies. What are they? What do you like about them?
Right. So what we like to do at Advisors Capital is find growth, right? Be in the middle of this growth change that's happening, but not pay too much for it. So Zebra is a great example of the kind of stocks we look for. So everybody knows Amazon. Everybody knows how much it's benefiting from the really rapid move over to online retail. Think about Amazon as the great white shark. Amazon is powering through the ocean, eating lots of stuff, getting fatter. Think about Zebra as the remora fish. That's the little fish that attaches itself to the great white and eats its scraps. The more the great white eats, the more the remora fish eats. That's Zebra. Zebra is the company that makes handheld barcode readers that are all over those Amazon warehouses. The more business Amazon does, the more Zebra does. But in addition, it is now also into hospitals, helping to track patients. So it's diversified its customers. And what we like about it, in addition to its growth prospects, is that while Amazon trades at 70 times next year's earnings, Zebra only costs 18 times. And you're still exposed to some of those great growth trends. So we like to find growth at a reasonable price, and Zebra is a great example of that.
Broadcom is another name you've got in the bucket here. Of course, there's been a lot of headlines and news on this stock in the last few years as it's tried to figure out what its trajectory will be and who it will be going with. Do you think that they've got a course set right now that you're confident in?
Yeah, you know, Broadcom is a complicated company. It's moving in the right direction. It does a lot of acquisitions, and its management team is really highly respected for that. One of the things that we find appealing about Broadcom is it serves 2 purposes for our clients. We have some growth clients that love its appreciation. In fact, over the last 2 years, not a lot of people recognize this, Broadcom has outperformed Amazon, Twitter, Facebook, and it's because of the acquisitions that it's done and its ability to continue to grow. It's added software recently, which means its margins are going to continue to go up. So it's a very well-run company, has a lot of growth ahead of it. It's in the iPhone with certain parts, but it's also in data centers. Both of those things are seeing a lot of big increase in demand because of how the world has changed and the acceleration of that change because of the pandemic.
JoAnne, I want to go back to that question you kind of posed earlier, which is one you said you're getting from clients a lot. You know, how much of this rally in these tech names, the big names that we talk about, is justified? What's your answer to that? I mean, we know the growth trajectory, but should it be, you know, should we have seen the price run up the way it did if you look at the big FANG names? You
know, it really does depend on which name you're talking about, right? And that's part of our ethos, is that we just build portfolios of 45-ish stocks for clients, because we do think some parts of the market are too expensive. And some of those FANG names, I think, fall into that bucket. We like some of them. We like Apple. We like Google. But like with Amazon, we would prefer to own a company like Zebra. Instead of another high growth company that's expensive, own Broadcom. It's trading at 13 times. So there are ways to avoid the expense of the FANG names. And we do feel like some names have run up too much. So our view is be selective, build a portfolio of 40 to 50 stocks and don't own the whole market, because there's definitely some names out there that in our view are trading so high, they're at risk that the multiples could contract should expectations change. I mean, right now, there's a lot more near-term risk than there is long-term risk because of the virus. And that's like upside down to the normal workings of the market. And that's what makes our clients nervous is that this near-term risk because of COVID, because of the case spikes, because of the closures that we're seeing, have folks nervous. But you look longer term, eventually we'll learn to deal with this. Eventually we'll get a vaccine. And if you own a company like a Zebra, like a Broadcom, or even look internationally and find growth abroad, like a Stone company, which we recently added to the portfolio right before they reported their earnings. And we got a nice pop right after that.
Yeah, what I was going to ask you about Stone, because I saw that you mentioned that, JoAnne, and I think we're indicating it was like a PayPal 10 years ago, but Brazilian. Yeah,
I know, right? What are we doing in Brazil? Interesting thing about Brazil. I mean, clearly it's struggling with the virus, right? And it's got a long way to go to get it under control by all evidence. But what Stone Company does is it's like a PayPal and an FIS combined. It's enabling the digital transformation of payments in Brazil. They're just moving from cash to credit. And it's as if you're owning PayPal, 10 years ago because of the deregulation that's happened in Brazil. And so even with the crisis, even with political risk in Brazil, that underlying shift towards digital payments is benefiting from deregulation that shows no sign of changing course. So the deregulation is ongoing. So even with COVID, in fact, COVID might, benefit them because it's amplifying that move to online. It's amplifying the move to credit instead of cash. So we like it for its growth, and we like it for also its international, potential as a diversifier. If we're worried that elections coming up in the fall might increase the risk of higher corporate taxes here in the U.S.
JoAnne Feeney, Advisors Capital Management. Great to get a chance to talk with you. Thanks so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.